Hey everybody, Raven here. Today, I'm going to be talking about retailers' occupation tokens, which are also known as taxation tokens. I'm going to discuss with you the history of tax, what sales tax tokens are, when they were issued, why they were issued, and the different types you may find while searching your local coin shop or LCS. Let's start off with this just gorgeous example sent to me by the one and only Flying Dutchman. Let's look under the scope right about now. This is a 1.5 mils retailer's occupation token from the great state of Illinois. This example was minted in 1935 and is made from aluminum and weighs 0.51 grams. The size is 16 millimeters in circumference and the thickness is 1.5 millimeters and is a round style coin or token. Was later demonetized in June of 1947. As we all know, there are only two things guaranteed in life, and that is death and taxes, my friends. The idea of taxes were actually invented by cultures during ancient times. History gives credit to the mighty Roman Empire under the Emperor Augustus, shown right here, around 9 AD, and they continued to use this taxation system until about 60 AD under the Emperor Nero, pictured right here. Then, for some reason, taxation kind of went away for quite a while and didn't reappear until 12th century in Europe, my friends. And that started in France when formal laws were written and passed around 1292. A 0.5% of tax was to be imposed on the sale of all goods and items, but excluded that of food. Modern taxation was established in the United States during the Civil War in 1892. The Union government under President Lincoln, and he is pictured right here, needed a way to cover expenses incurred by the war. The Union government had to find a way to pay for what was going to be a long and expensive conflict/war with the South or Confederate States. Thus, a 1% national tax was proposed to citizens, but the bill was never enacted, as citizens of the United States had long fought against the idea of taxation with events like the Boston Tea Party. However, in 1921, West Virginia was the first state to successfully pass tax legislation, and Georgia in 1929, but the states could never successfully enforce or implement the system and failed to progress within the program and law. By 1940, over 30 states had enacted legislation and systems for tax collection purposes. This was a huge success, and early programs generated much-needed income for the different states. In April to May of 1933, in the town of Kewanee, Illinois, was the first city in the U.S. to produce and use sales tokens, and like this one right here under the scope. The first tokens were 16 millimeters in diameter and made of copper, but the Illinois State Supreme Court felt the amount of taxation was too much and struck down the legislation, and the 3% tax tokens were demonetized and removed from circulation. However, in July that same year, a 2% sales tax was passed, and the tokens were once again circulated for use. In July of 1935, the state government of Illinois issued state tax tokens, but they were quickly pulled from circulation because they looked too much like dimes that were minted by the U.S. The ones that resembled dimes were only issued for 8 days before being replaced with the 16 millimeter by 16 millimeter square taxation tokens. States that refused to issue tax tokens, the merchants issued them on their own to help their customers and also cover their taxes. These local tax tokens were mainly issued in Washington and Illinois. Most states stopped the usage of these tokens during World War II because additional ration tokens and stamps made it really difficult to track the taxation that was going on because there were just so many different systems in place. The reason tax tokens were used is because merchants had to account for the 3% tax, but merchandise was so inexpensive at that time that in some instances it made it really difficult to collect tax. For example, it was impossible to collect tax on a 10-cent purchase because 3% would actually equate to 3/10 of 1 cent. If you rounded it down, the merchant would not collect any tax. If you rounded it up, the government made 7/10 of a cent for every 10 cents used. Let's use an example. If a store owner sold 100 10-cent candies, he was losing 30 cents a day for tax revenues to the state alone. So these tax tokens were invented to help curb that happening. And what this did was it led to the merchant charging 11 cents for a candy, and they would give back a tax token for the candy. The next time the customer came in and they bought more candy, they could return the tax token to the merchant to collect tax on each transaction. A mill is equal to 1/10 of a cent or 1/1000th of a dollar. The system, though, was a bit convoluted, and depending on the state, the tokens would have different values, and that would also make it difficult. To give you an example, there was 1 mil and 5 mil coins that were the most, or tokens that were the most common, but there were also denominations of 1/5 of a cent, a 1.5 mil, and tax tokens for 10 cents or less. Now, there are over 500 different types of tax tokens from the 13 states that implemented these, and these tax tokens are often overlooked, and you can find valuable ones in your local coin shop or LCS in their junk bins. Because so many were produced in some states, it makes it very difficult for dealers to know the true value without doing a lot of research. You can find some tax tokens for as little as 10 to 25 cents each, and if you get lucky, you have the potential to find ones well worth over $100. Also, if you were lucky enough to find pattern tokens, and these pattern tokens were actually the prototypes from private mints, and they carry great premiums. So there's a lot of little cool things in the tax token category that you can do well in, but the problem is there's such a limited amount of collectors dedicated to these tokens, and it keeps the demand, where it's just not as high as I think, honestly, it should be. But one really cool aspect of this is that when you're grading tokens, there's only two types being considered: circulated and uncirculated. This allows for a person to collect some great pieces of history without hurting their wallets or interest in tax tokens. It takes very little knowledge to do well. The example we have here today for today is an uncirculated tax token, and it's worth about $15. Let's take a look at it again. This thing is really, really nice, and actually on the other side, it does have an error in it. There's a cud on the 2 of the 1.5 mils, as you can see right in the top of the 2 right there, where I'm pointing my pen. That spot is pretty cool to see a little bit of an error. This one is worth, like I said, about $15. I hope you enjoyed the history and why tax tokens were used and the different types that exist. Maybe you too will start collecting these pieces of history in your own collection. I want to make a special shout out to the one and only Flying Dutchman, who is the inspiration and reason for me making this video. Matter of fact, this is his sticker that I'm putting under the scope here, and there will be a link down below to his channel in the description of the video, so please make sure to give him some love. If you want to correspond, it's ravenhawkcoins@gmail.com. Our P.O. Box is 721-296, Norman, Oklahoma 73070. Like always, please make sure to take care of one another, and we'll see you real soon. Ravenhawk Coins, have a great day.